All right, could you guys hear me? Thank you. Not sure what's going on with this webcam. It's not working, shockingly. All right, well, I'll try to figure this out. I'll do the disclaimer. I'll be back in a minute with Fabio.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial stability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and any associated websites or digital means for educational purposes only should not be consumed as an express or implied promise or guarantee that you will profit by losses may be limited in any manner whatsoever. Users of the information accept full responsibility for the outcomes of their deployment to most Apple's trading, LLC, and any associated companies, agents, management, owners, and customers farmers without information. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 4.41, hypothetical and simulated trading performance results have certain inherent limitations, some of which are described herein. No representation is being made of any account or is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or adhere to a particular trading program in spite of trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot fully account for in simulated trading or in the preparation of hypothetical performance results involved, of which can adversely affect actual trading results.
Right. This link that I sent on earlier works. I'm only seeing the room members on here.
Hi, Scott.
Hey, Fabio. Just wondering if that link I posted on Twitter works. I haven't heard, no one said it hasn't worked, so I figured there'd be more than just my room. I sent it out to about 1,300 people. So, oh well, if they come on, they come on. If not, we'll present to my room and then we'll post this publicly later. Let me show my screen here. So I'll just go over a couple quick things that I've done today with your levels and then turn it over to you. I got some questions too, the more I'm going through these courses and stuff. Oh, you guys got my screen? You see my screen, Fabio?
Yeah.
Okay. All right, so just some of the things that I'm doing with these GEX levels, they're still pretty new. I mean, I wouldn't say new, I've been using them since last October-ish. You know, I immediately developed strategies for them just because I know how powerful they are, because these, you know, options dealers are a huge factor in the market these days. Knowing these gamma levels are very, very important. Okay, there we go. So we've developed different strategies, you know, off of these levels. One, I have a reversion trade. So these are the stop iceberg events. These are the core of my trading, which is showing the CME MBO enhanced data. So I won't put a trade on. I don't care what area we're in without this activity. And then I have rules around, you know, how I get in these trades, whether they're position trades or reversion trades. So the reversion trade is more of a scalp that pops back to the. Turn this down a little bit. The bot's getting some bad feedback from you, Fabio. I think it's yours anyway. Anyway, these markets have a ridiculous propensity to come back to these zones as it is, and then when you can use these GEX levels where you know dealers are going to be hedging as it comes into them, they're even better. So this is one I just took. It was a bounce off the blind spot to GEX level, and I took the 1 ATR reversion, which is right there, and then back out at the zone. You can see that exit. So that's just one trade I put on today. Another trade I'm still in, but part of it worked. Call this one a sexy Gexy, where I'm looking for most of my trades. I'm waiting for moves out of the iceberg events to put on the trade. These sexy Gexys, I already know these dealers are going to be hedging at these areas. So when I get activity into these areas, I will put the trade on right when the event fires off and look for a quick dealer reaction, get out of some, and then hold the other half. So right now I have the other half. You can see these markets are just whipsawing with these news headlines. This is 100% a news headline. You know, it doesn't trade like this without that. But that's, you know, all that aside, you know, when the markets are normal per se, you know, these levels are incredible. But no matter what you're using these days, it's been very treacherous trade the last 5 months. Anyone knows who's been trading between the tariff headlines, now the Iranian, Israel headlines. It's brutal. So you just got to, when you're in a trade, you got to just hope the headline. I call it headline roulette. Just got to hope the market rips in your favor. So anyway, I put this sexy Gexy on. I didn't put this one on the first time down here. There was bias in this Gex level the first time. My disqualifier for moves into these Gex levels where I won't fade them is if I see heavy relative volume, right? So you can see here on this chart at the time. The email I sent out. So this was right around, yeah, dear. I think it was right around this time. Yeah, 6:40 my time. So you can see this relative volume. So I keep track of the relative volume, Sear chart relative volume, where I can look at the exact 5-minute part, 5-minute period, the last 30 days. It tells me if it's above average. So this was, if it turns yellow, it means it was at least 2 times normal. So at this move down in here, I didn't put the sexy Gexy on because I don't want to be messing. I know the dealers are going to be hedging at these areas, but when that relative volume is spiking so many times, it blows through the areas because the big money's in here unloading. So I didn't take that one, but then I moved up here, came back, and then I got another buy iceberg event, and I put that one on, and then it tried to move lower. It almost stopped me out at the time, but this held, and then I got out of one when it ripped up here, and I still have one on. But so those are the 2 main trades I take right now off of them. I'm learning more and more about them. You know, I've been trading these levels more as like exact prices, and Fabio talking, I'll let him talk more about it, but more as zones. And I've been watching Patrick's stuff on the education, the futures trading stuff, where he'll look for areas that there's multiple levels and then draw zones. So I've been a little too exact. For instance, like yesterday, I tried to sell into the 1-day minimum, and I put, like, there was an event. It was a short setup where I had an event, and then the entry was like right in front of the 1-day minimum, and I put it just underneath, and I got ticked into it and got stopped out. So I just want to get your thoughts on, you know, with these zones, how far, like when you do go long, say for you did go long this blind spot. Well, how far are you putting your stop? Are you using ATR? What are you using to judge that? And like, what do you think? Like, if I'm going to enter a trade, how far below should I go before I feel safe that I'm not going to get whipsawed by a hedging activity type of thing? So those are just a few of the questions. So I'll give you, I don't know if you want to share your screen or how you want to do this for this webinar, Fabio.
Sure, absolutely. Give me 1 second. Let me see if I can.
Yeah, I might have to make you presenter here. Let's see.
Can you see my screen?
Yep.
You can see my kind of like dashboard and trading view, right? Yeah. Perfect.
Yep.
Yeah. So I think as a rule of thumb, I don't know, Scott, if you or your user use the dashboard, it's always good to come in the morning and kind of like start building a routine with kind of like, not the levels obviously are going to be the ones that you're going to actionably trade in the platform, but I think it's also very important to just come here and have a read and look at what's going on. So for example, when I come into yes, for example, always look at the scores. So this is our Q score, and basically the idea behind it is to help you simplify the read of the data. We look at different factors, and we did, I can share a session that we did yesterday as well. So we look at option activity, we look at volatility, we look at momentum and seasonality. So currently, we are still in a bullish side on ES, meaning that the option activity is very, very bullish and very, you can see it from the net positioning right here. We have this big put support at 6,000. I think this went up from 5,800 to 6,000. So again, that can also become a very strong reaction. So knowing that, for example, the market has been like placing like put protection at the 6,000 level could be a very important information to know, because as the market drops, then we are very close to that put support. So before it was like 200 points below, and now we are at 6,000. So it's kind of like, I think the market is kind of like protecting a lot at these levels. So understanding this is very important. And you see there's a lot of like negative positioning there. we also are in negative gamma. So even though we are kind of bullish on the option side, we are in a negative gamma environment. So that means that the volatility will be higher. So when you look at your stop loss, understanding this can help you. Okay, like, hold on, we're still in a bullish kind of like market, in an uptrend on yes, but we are kind of like in a negative gamma environment. So that means that your stop loss that you can use, your ATR should be adjusted based on this data point here.
Meaning expanded?
Expanded because it could be that it doesn't mean that the market is going to drop or go in the opposite direction, but it means that the volatility due to the hedging activity will be higher. So that means that if you have, for example, a 5-point stop loss on yes, most likely it could be that you get chopped out because of that increased volatility. So understanding that we are now in a more kind of like volatile day as a trader will also help you adjust your stop loss.
Okay, and then how are you determining we're in negative gamma? Just because there's more activity, more contracts that are short?
Well,
Yeah.
so we look at basically the gamma exposure. So what you see here in the matrix, this is basically looking at all the expirations. So this is like, we're looking already at the September contract. So we have rolled our generic to September. So we are looking at the whole option chain of the September yes contract in this case. And we can see that we are in a negative gamma environment, meaning that the market is selling more option than buying. And that means that the market maker is hedging differently than if we were in a positive gamma environment. So understanding this is very important. So again, we also see maybe some divergence. So always looking at the divergence. So if we look at SPX, for example, we are in a positive gamma environment in SPX. But on the September future on yes, we are now in negative gamma. So always look at these kind of like different perspective, because that could really tell you what the market is kind of thinking.
Good.
And then once we go in here, then of course you have you know, the different levels, and of course we have our HVR. We now have our put support, which before it was much lower. So now we are in a very tight range. So this area right here is going to be very, very important.
So is that bullish for you, for your thesis?
No, I don't think it's bullish. I think it's more like on the bearish side, because I think what the market is doing is like trying to hedge at higher strikes, because they are probably fearing that what's going on in the Middle East and what's going on geopolitically could potentially have an effect on the price. So, you know, before, so that means that they're also willing to pay higher premiums, because the put side is very close to the spot. So then if we go back here, for example, we can also look at the skew. So for example, now you can see that basically the implied volatility of out of the money puts is now much higher than the implied volatility of out of the money calls. So that means that the market is really willing to pay more money for put protection because of what's going on in the market. So we're still, although we're still kind of like in a very, very bullish market, I think we are starting to see concerns about a downside movement, and you can see it from here.
So when you see that the implied volatility is higher for the puts, does that make, in your mind, the put support more of a magnet versus, you know, say the call resistance? Say the calls were the ones with the higher implied volatility. Does that mean that we have a better chance of rallying to the call resistance? In this case, the put support, just because the volatility is higher for puts? Does that have any bearing?
I mean, I wouldn't say more of a magnet. I would say that the market is preparing for a potential downturn, and they are not willing to lose their profit. So what I see from here, I'm seeing that, okay, there's a lot of things happening in the macro environment, right? We're still in a bullish, very bullish market, because you can see it from the option score. We can also see it from the positioning here. So we have a very strong net gamma exposure, and we can also see it from the macro. So across the board, when you see like this green, mean that the gamma exposure is more on the positive side than on the negative side. But I think what's happening because of the recent environment, so for example, here we see today's expiration, there's a lot of negative gamma at this 5,900 level for the 0DTE side. But the skew will tell me like in 1 month from now, what is the market thinking? So they are now willing to kind of like pay more for out of the money puts. That meaning that if there is a big movement to the downside, they'll be protected, but of course they're going to pay more for premium rather than an upside movement. And again, I'm not saying the market will drop. I'm just saying what I read from the data here.
Right, but as a thesis, if you're trading, which way would you be leaning based on what you just told me? Short?
So I don't think I would be leaning short, but I just say that if we are going to the short side, the break of this level would be very, very important. So if we are breaking this put support, like looking at, for example, if we go back to yes, there's a strong reaction area. So if you look at yes, for example, what does that put support mean? The put support is this level right here. So you see is a very strong red bar here. So a couple of things could happen there. It could happen that we see a strong reaction, and the option holder and the market is starting to monetize on that, and therefore the dealers are releasing the hedges. That means that there's kind of like, if we go to this level, then means that we could see potentially a support area right there. But if we then break here, then that could be that we see an inflection point because of this high negative gamma that we see here. So I think you always have to think about the level as two potential scenarios. And then, of course, look at the price action after the event. So if we break through this level, then, of course, there's going to be an increase in liquidity to the downside if this doesn't become a support area, basically.
So you're kind of neutral here, but if we break that level, then you're going to be definitely bearish leaning, what you're saying.
Yes, like here, of course, we are in a tight range. So we've been going on a range for the past kind of like, so if we look at SPX, we've been kind of like on this range for the past kind of like week or so. So we have been between 650 and 5,000, and so between the 6,000. So it's still not really defined, but for example, on ES, so you can see like here, so on SPX, the put support is at 5,800, but the future market is pricing a put support at 6,000. So it's always important to understand basically also the different players, right? So whoever is trading SPX is different than who is trading ES or SPY. So this can tell you a lot. So on ES, we are having a lot of concerns at the 6,000 level. So as future traders, on SPX, the put support is still at 5,800. So there's not such a big, so there's quite a divergence there, which is kind of interesting.
You read anything into that? Does that tell you any?
Well, I think what it tells me is that I think the future market, and think about a lot of the large asset managers are also hedging using futures. So I think this tells me that there's a lot of concern on this area, maybe in the short term. So if we look at this chart here, so I think, yeah, looking, for example, at the different expiration as they evolve. So for example, if we open here we can see our put support, and we're especially looking at this. So we're moving on the 6,000 on this kind of like expiration in the future. So I think looking at how this changes over the next few days could be important, because for example, if this goes lower, so if this goes back to 5,800, that means that the market is not seeking protection in a really close strike, and also they are paying less price. So they're willing to go further because they don't believe that there's going to be like a downturn in the near strike. So they're willing to take more risk and protect themselves at lower strikes. But when I see something like this, where we are very close to the price action, that tells me that the market is worried about the potential downside. So what I would do there is I would monitor very closely this area here, because as we say, this is our high vol level 0 DTEs. We are high vol level, so we are shifting between positive gamma environment and a negative gamma environment. So again, this is kind of like the area where the market is shifting from kind of positive to negative, right? This is for 0 DTs options, this is for all expiration, and then we have our put support right here. So this area could be an interesting area, but then of course to the downside we have
All right, so this is a question because I'm just starting to watch the futures education stuff you got on your website as part of your membership. So when you highlight this entire area, like you're looking potentially for this to be support for now. Like, so it moves into that area. For you as a trader, how do you trade this? Do you just go long right away? Where's your stop? Like if you're using this shaded area as your area to trade.
So I think so it depends what type of strategy you have. So as a scalper, you could potentially look at moving from box to box, because what we know is that, you know, so for example, Patrick really trades these two levels. He likes to trade between those two levels because you see an increase in volatility coming on these levels. But if you are more like a swing trader, then of course you might want to stay away from like trading in this area, or like taking a position and adjusting your stop outside this area. So if you, for example, take a trade here, then you know it could happen that you get chopped out if you don't place a stop maybe around this area. So it's kind of like, you know, this area could be a lot of like sorry, let me do it. Could be a lot of like movement like this, something like that, and then we're gonna see either a direction or a strong direction here. So this, you know, I would basically monitor this.
So this is where I would get confused though. Like, so you have that zone there, and he talked about like drawing the zones, and it depends on your roadmap and things like that. So I mean, so say I get long in that shaded area, and then I put it right below there. Well, then you have the 1 day minimum. So then I'm saying to myself, well, should I put it below the 1 day minimum as well? Like this is where, just looking at this stuff, I mean, outside of what I'm doing, these are the kind of questions that I have watching him in the education stuff and with you, like how far do you go, right, to prove that you're wrong on the trade?
Yeah, no, of course. I mean, of course, the 1 day minimum is a great support for volatility. I think what you also need to look is, so the levels is basically the translation of the option data. So I think you have to go one step further, because for what I said, for example, if we break the put support, then that means that there could be a strong move to the downside, because if the investors don't like monetize their put option, and you know market makers are hedging, they're hedging by shorting the underlying when the price goes down and going long when the price goes up. So that means that if you see a strong break here, then yes, your 1 day minimum could be another point, but in reality, maybe you're completely on the wrong side of the trade. So it doesn't matter if
that goes back to what you were saying, how important that level is. Like if it does break there, you probably don't need to be putting it under the 1 day minimum, your stop, if you were long, type of thing, right?
Exactly. So you might be on the wrong side, but again, that doesn't, you know, that's just like a read. So if you're looking at this chart, I can see that, okay, so yes, September contract, there's a lot of negative activity compared to SPX. So maybe the future market is reacting faster or different than the spot market. Also, you need to think about the holding period on who's trading future versus who's trading SPX or SPY, right? So who trade SPY is most likely investment company that are more like positioned to the longer term. So if you are like a 401k plan, or like an asset manager, or even like a retail trader that has SPY in your portfolio, maybe you're not really panicking, you're just maybe seeking protection. So if you see like a lot of like put activity on SPY, maybe it's just investors that are just really worried about the environment and they just want to protect themselves, but they're not actually betting on a downside move. They're just really looking for a protection through the option market. But when you start looking at the future market, then of course this is a little bit different, because this is more like a trading environment. So here you have more like hedge funds that maybe are placing, or like large funds that are you know, covering themselves with futures. So yeah, it's very important that we look at the divergence. So we are in a very volatile market. You know, we are in a negative gamma environment. We are in a positive gamma environment on SPX, but at the same time, things could change really fast as well.
Let me we'll get to a couple questions here. Are you ready for questions, or you want to keep?
Sure. Yeah, absolutely.
First one, Sozo is just peppering me with questions here. He's in my trade room. So if you're in my trade room, throw him in there. If you're just on the webinar, not a member of my trade room, just put him in the GoToMeeting questions and he can see him directly as well. So first question, does a break at the HVL level compare to a break of put support? Does it put us in a negative gamma? Oh, he answered it. He already said you answered that.
Yeah. So I would say normally what we see is when we break one of these two levels, we see a very strong volatility after the break or after the bounce back. So those are typically very important. That's why, for example, Patrick loves to trade those, because it's really an increase in volatility. So again, it doesn't mean that when you touch this level, it's going to bounce back. It just means that if we always follow the price action, and then of course you get the increased volatility due to the fact that we are kind of switching from kind of like a positive to a negative environment, and therefore also the hedging activity behaves very differently.
So are there only certain levels that you'll watch? For instance, I don't see your blind spots on here. So will you only watch these levels and trade off of these levels? Because obviously you can have, you bring them all up, there's just levels everywhere, and it kind of gets your head spinning, like what to do type of thing, right? So what are your important levels that you'll pay attention to, and other ones you won't trade off of type of thing?
So I basically have my trading view set like this, and you can do the same on Bookmap or on any of the application. I would use basically my primary levels and my jacks 1 to 5. So what I see here is basically it's basically like the way I set up my chart, and then I could decide, for example, if I'm taking a swing position, then maybe I could just decide just have my primary levels there, and then I would have my blind spot as kind of like supporting tool. So for example, in this case, like the way you would draw kind of the roadmap is like you have this area here that is, you have blind spots and you have the HVL, and then this area here, which is an area where I would probably want to stay away from, or like just if I want to get into this area. So if I want to get into put support, I would still very monitor what's happening, and then I would have like maybe a larger stop loss right here. So this is blind spot 2 as well. So, and then if you take away kind of like the levels, then of course, like you don't want to trade in this box because you have basically the IVOL level, but you also have like two blind spots there. And then if you are looking for small scalps, then this could be an interesting break from this box to this box. And then once we get to this area, I would be very, very cautious about it.
Okay. It's long gold here. I'm going to get out of a couple of these real quick.
Yeah. Also, I don't know if you guys know, the indicator also draws the roadmap for you. So let me show you what it does. So let's start with the gamma levels. I can come here, I can create my roadmap, and basically this would kind of like create my boxes here based on gamma levels, and then the ratio really defines how big of a box you want it to be. So the higher the ratio, the bigger the box. So if I increase this to 6, for example, I will start getting like larger boxes there based on the.
What's that basing off of though? What's the numeric?
Yeah, it's a calculation based on the asset. So, and based on where the gamma levels are. So in this case, for example, if I use a ratio of 10, then I would basically have those boxes here, which have the bigger levels that we showed you, and then we have this box, which is the core resistance. But if I'm more like a scalper and I want to trade smaller areas, then I could, I think for the SNQ, a ratio of 4 or 3 works good. But then again, it's really totally customizable by the user.
And then the blind spots, those are your proprietary levels?
Which one, sorry?
The blind spots?
Yeah, yeah.
And they're basically based off of things like the SPY, QQQ, things like that, right? Or the ETF.
Yeah. So what? Yeah. So let's go back to how the blind spot came about. So basically, so if we go back to the dashboard, we have data on the index, the ETF, and the future. So all these have 3 different option chains. So there could be 3 different set of levels that you can get on SPY, SPX, and yes. If we look at the option activity, you can quickly see basically that SPX and SPY have a very, so you can see by the number here, have a very high gamma, because of course they are the largest asset that have option activity. So SPX is larger, and then you have SPY, right? That also has a lot of activity there. So clearly, looking at those 2 assets in conjunction, so if you trade future, looking at SPX in conjunction with SPY and SPX is very important. But the problem is that if you start to convert levels like from SPY and SPX on yes, then it could be that you have a lot of lines on your chart. A lot of them are overlapping, so you see that, for example, the HVL on SPY is on the same level, but again, this chart is very hard to use because it's really, there's a lot of data. So what you can do, you could basically use that to kind of draw your areas like this, and that works. So we have a lot of users that do that, and then basically you just would use the data, or we use our blind spots. But the blind spots are going a step further, because we're not only looking at correlation between SPX and yes, we actually look at other types of correlation. So for example, if you trade yes, the max 7 will have an impact on the price. So if NVIDIA moves, then of course yes will move, or NQ will move. So we could have, for example, the conversion of NVIDIA to yes as well, right here. So you could have NVIDIA levels on yes, so you see them here. But again, NVIDIA is one. What about Tesla? What about Facebook? What about Apple? What about all the different other companies that could have an impact? What about gold? What about crude oil? So we basically run our correlation matrix and create basically an indicator that will show you the areas in the chart that could affect the asset that you are trading, based on a lot of different complex algorithms that we develop, essentially.
All right, well, while you're on this, let me just cover this. I want to get through his questions because I got a couple of my own. He says he likes GEX 1 through 5. Does he use all the blind spot levels?
The blind spots, yes, I would use all of them, because so GEX 1 to 5, GEX 1 to 10 means that GEX 1 has a higher gamma exposure than GEX 10. So if you look at the chart again, that means that, you know, GEX 1 could be potentially this level here, and of course, so I would only take the top 5, for example. Blind spot is different, because it doesn't mean that just because it's blind spot 10, this is not an important area, because it's still going to be an important reaction area. So I would treat blind spot a little bit different. So I would always have all of them, and then use them as my confirmation.
Okay. All right, so you're killing me with all these questions. let me get through these real quick. I actually took some out. That's good. Which is weightier, HVL or zero date to expiration HVL? I would guess HVL, right?
Yeah. So basically, HVL is looking at. So if we go back to yes, is looking at all expirations. So it's basically looking at the full option chain. So it's looking at all these expiration, but at the same time, for example, it's very important that you also monitor the zero ETs. And I'll give you an example. Let's go back to SPX for 1 second. So if we look at SPX, and if we look at the option chain on June 20, which is in a couple of days, 48% of delta, 29% of open interest, and 9.5% of gamma is expiring. So these zero DTs level, so this IVOL level that right now is at 5,980 for that expiration, are going to be very, very key, especially when there's such a high gamma and delta and open interest expiring, right? So it's OPEX So it's going to be a lot of movement. So that means that even a small movement in the underlying price with such a large amount of gamma could actually cause a very strong reaction. Because think about 0 DTEs are the options with the highest gamma sensitivity and delta sensitivity, because they have less time to expiration. So even like a very, very small movement in the underlying price could really affect the price movement. And the way you have to think about it is, let's just say that we are here today, right? So let's just say that we are here right now. And let's say that today we are looking at the core resistance 0 DTE. So we are trading at 6,000 and 0 DTE is at 6,124. So if it's 9:30, the chances of the price reaching this level at 9:30 are very, very small, because again, we see like there's not a lot of like movement overnight, and basically those options that will expire at the end of the day have a very low delta, right? So the delta of this option will be very, very small. What happens when the price rises? So we see maybe there's a news, maybe there's an event like FOMC, whatever that might be. Suddenly, in a matter of a few minutes or a few hours, the price goes very, very high and start getting to this level, right? So suddenly the delta of these options start to change and start increasing. The gamma of this option also becomes much higher, and the gamma exposure of this option becomes higher. So that means that as the price approaches this level, the activity to hedge those positions here becomes stronger. And then if, for example, an event happens and a catalyst happens and the price starts to arrive at this level, then that's when you see like very strong reactions on. So it's very important that you understand basically what is the gamma exposure for the day. Is this going to be a very strong reaction area? Is this going to be like a not very important reaction area? So it really depends on the expiration date. It really depends on the option data. But essentially, I would say that's why we plot 0 DTEs, because they're very, very important.
You on that. So you can keep asking me. I just saw a bunch of them there. Let me ask my stuff first, because one of them is very basic. I've been having problems with that. I've been asking you, but I haven't had a chance to dive into it. So let me just show my screen here real quick. All right, do you see my screen, blue screen, or screwed now?
Not yet.
Let me see what's going on here. Still nothing?
Yeah, I can see it.
Okay. So quickly, just to show you guys, like, what, my room members know this, but this is a perfect example of a sexy Gexy and a back in black. We call it bounce off the Gex level. So the market came up here. There actually was no heavy relative volume on this, so I could have taken this one. Buy, stop, run right into put support. Went through it a little bit, but I mean, I would have taken it right at that and risked. That's my stop. The yellow line is the stop. It's just outside my ATR. So risk there, and then you can see it reacted. So again, with the sexy Gexys, I'm looking for a quick reaction from the dealers. I get out a half and then hold a half for a bigger move. So I probably would be potentially stopped out of the second half here, but the first half worked. There's another example of a back in black where the market got through Gex 1 and then bounced off Gex 1. Here's your reversion entry. You're in, you're out. So that's the back and back. We call it bid, back in black, and sexy Gexy, and that's all current stuff that just happened. I didn't take any of those because they're easy winners. I don't like easy winners, but I actually didn't have a chance to put those on, but I just wanted to point that out. All right, so now I've been asking this. I don't understand what happened here on TradingView, right? So before, I would be able to click on this and it would say, it would have MenthorQ, and then I would go in and I would get the levels from Discord and I'd put them in. So now I do have these, but those don't populate and I can't bring in the MenthorQ levels. So what am I not doing here?
Can you click on the end of day one? MenthorQ live at the end of day?
Yeah.
Just go back to your trading view. Yeah, there you go.
Yeah.
So basically, the
I gotta click on each day. I'm sorry, I didn't mean to interrupt you. Go ahead.
Yeah, so basically we changed the way we permission the indicator. So what you had before was a link that we took away. The same indicator that you were accessing before is the custom level. So if you open the MenthorQ custom levels, yeah. So that's basically the old way of adding the levels, which is through the manual import via the bot or via the dashboard. So what we've done now is that we actually update the levels for you guys, both at the end of day level, at the intraday level. So what you see is the MenthorQ Gamma levels end of day will have all the end of day data for about 250 assets, which is futures, top companies, ETFs, etc. For those who are trading intraday, what you can also do is you could have the intraday level and convert, for example, the intraday levels from QQQ to NQ. So you see that now you don't get the intraday because you're on the future side, but if you open QQQ, you will see the intraday levels. So the end of the, so if you are trading futures, you would have the end of day indicator. If you then wanna basically convert the intraday levels from a stock or an index to the future, then you can add the intraday indicator as well.
Is it under funds?
No, just click on QQQ. Yeah, okay, the first one on the stocks. Yeah.
So what, like this? Why doesn't it?
Yeah, just click on the first one, the first option. Yeah.
This one. I'm very ignorant when it comes to the trading view so far. I just haven't used it enough. And then I come here.
Yeah, just
intraday.
Yeah. Yeah. So you see, for example, at the top right, you have the timestamp, the white box at the top right. This will tell you basically where the lab. So this we're looking at the 12 p.m. Eastern levels, and
right, but I don't see anything, nothing populated.
Yeah, just strange. Okay, let me check that 1 second.
I'm just glad I have you on here, because then I sit here and I get frustrated and I just X out of it, get too mad.
No worries. Yeah, let me check that. Okay, that's weird because
it's called the Cedar Reach. I didn't know.
Yeah, you have the wrong ticker. I think you try again to put QQQ because I think it's a different ticker. Because
I thought there was like 10 of them.
So
not strategy.
Back on the top, yeah, just type QQQ. Then go under all maybe. Yeah, the first one.
This one here.
Yeah.
Series 1.
Yeah. Okay.
Why do I have to do all that? I gotta get that out of the webinar. Obviously, that's all my personal information.
Yeah, you had the wrong ticker, I think.
So once I do that, I could just click on that and then.
Yep.
Okay. So that's why it didn't populate, because I was just on the wrong thing. Okay,
Yeah.
well, that's all. And then the intraday levels are always just going to be, those are changing, but they're just going to be on the ETFs, right? We went over that before, I believe.
ETFs and indices and stocks, yes.
Okay. All right, on that, and then I got a question for more thesis stuff. So last week, I forgot what day this was. Let's see, this was June 13th. So what do you read into, like crude gapped up huge? This was the start of the conflict stuff. So what do you read into? There's no GEX levels here. They're all down here. Is that, I mean, what does that mean? Does that mean it's got a higher chance of coming back? Does that mean, what does that mean to you?
What is this? This is
crude. This was crude on June 13th. There was a gap up overnight.
Yeah. So for example, what I would do in this case is because the futures level are end of day, what I would do is I would potentially use conversion of levels. So for example, you could use USO intraday levels. So I think that was the day where, the crude oil shot up like 3-4% overnight.
Right.
Obviously, clearly, like in those type of scenarios, it's always like good to confirm what other assets are doing. So I would have used, for example, the USO converted levels, and we will get intraday futures level as well, but we're working on it. But
Most of those are coming.
yes, it's part of the plan. It's just more like very expensive data, and
Right.
but we are going to have that for sure. But yeah, exactly. So
that was that night. I think this was Sunday night, right? Or was,
yeah, of course,
right.
course.
Something like that. Yeah. So it gapped up, but that's why. But I mean, does this tell you anything as far as a thesis? Like it may come back to all these levels, or these are just going to switch, fill up, you know, because it's prior day's data. So this doesn't really. These are all going to move.
I think you need to think about what happened that Sunday is something that cannot be predicted by a model. So it's basically like macro event, obviously airstrike, missile attacks, all this kind of stuff. These are like kind of like what we call not black swan events, but those are things that happen, and then the market readjusts once the event happens. So nobody can forecast that. So I think in that case, you would have needed to wait for how the market reassessed after the event during that day. So I think as a rule of thumb, like if you don't see the levels there, maybe it's worth waiting instead of taking too much risk, because the market is kind of like reassessing the situation, right? So it's kind of like, you cannot predict COVID, but then you can kind of trade when the market has priced in what's going to happen,
Right.
Yeah.
All right, there's a question in the GoToMeeting questions, Johnson. Does Sierra chart update the levels automatically through the API?
Yeah. Yeah. So Sierra chart, NinjaTrader, Motive Wave, TrendSpider, all of these, they work exactly like Bookmap. They update via API. They all have the conversion feature, so you could actually plot in Sierra converted SPX intraday levels on ES. In Bookmap, we don't have it yet. There's some limitation on the Priceline tool that we use, so there's no conversion yet. We are trying to figure out a way to do it, but yes, you don't have that in Bookmap currently.
Okay. Well, so you're saying I could just use Sierra chart instead of TradingView, right? I don't need to be paying for the extra. That's the only reason I have that thing is for the gamma levels. But you're automatically update there?
You can use any platform. So once you have a subscription, you can access all of the platforms. So you can use TradingView, you can use Sierra, you can use Bookmap. Really.
So why don't you personally use Sierra chart versus TradingView?
For me, Sierra chart is too complicated. I've never used it, so it's more. So I use, for example, NinjaTrader a bit, and then I also have a Mac, so TradingView for me is just easier. But also we use it with demonstration. So I would trade basically on a different platform. So I would use TradingView for my charting, and then potentially trade on a different tool.
Got it. Okay, and then these Bookmap gamma levels, is there a way to put, I mean, this is more Priceline related, but is there a way to have alerts? I mean, I put them in manually here, but is there a way to set alerts for these levels? Do you know?
On Bookmap, I don't believe so.
Okay.
We have alerts on Ninja, and I can show you something that is coming that would be very, very useful if you want.
All right, yeah, so I'm done with my questions. The quick question while I'm giving you control of this is, so you said for the intraday levels, use QQQ for NQ. What do you use for ES? Is it SPY or is it SPX for the intraday?
I normally use SPX, but a lot of users use SPY as well, because they both have a lot of option activity. But for me, it's more like SPX is in line. So if I trade futures, SPX is more in line with the type of customer base that would trade future. So think about, it's always like who buys SPY and who buys SPX. So SPY would be like the customer of SPY, as we said before, would be a fund that is more like longer term. So while SPX and ES are more like shorter term positioning tools.
And the SPX updates automatically?
Yeah, the SPX update automatically 14 times per day. So we have every 30 minutes, we have a different snapshot. And basically, yeah, so I mean, the SPX is by far the largest option. So it's by far the most traded asset within the option market. Is also it has a lot of zero DTs volume, so that's why the SPX zero DTs levels can also be very, very useful. So I would use, I use SPX on ES, and I use QQQ because NDX does not have a lot of option volume compared to QQQ.
Okay.
Yeah, and then if you look at gold, you can use GLD. It's normally a good way. If you trade YM, you can use the DIA conversion. There's no option activity on YM, so there's no option chains on YM. So we have blind spots on YM, or we can use blind spots level. So here on YM, or we can do both the intraday or end of day conversion of DIA, which is the ETF on Dow Jones, and YM. Right.
Okay. Got it. And then you already said this, so oil is USO. That one updates intraday.
Yeah. So for oil, the best tool that is available is USO, so the USO ETF. But always, one thing that you need to understand is that because USO uses futures to follow the price of oil, you always need to monitor the status of the curve, whether we are in contango backwardation, so it doesn't really move exactly in the same direction. So USO can be good for shorter term analysis, but maybe not longer term because of the way the rolling of the contracts work and the futures curve.
Okay, and you see you're going to show something else that was in development.
Yeah, so what we are developing is a real-time scanning tool for TradingView. This one will probably be released sometime in July. And basically, the way it works is that we are going to have some default tickers added. Don't look at this because these are going to change, but we're going to have all the futures and all the main indices. And then you'll be able to import also your custom ticker. So let's say that you wanted to be alerted on, I don't know, IWM, right? So you could upload the levels here, and then what would happen is that you can get alerted on any of these levels right here. You can get breakout alerts to the upside, breakdown alerts to the downside. And basically, then what's going to happen is that once you set up the levels, you can come here, create your alerts, and then the system will basically alert you on any of these assets in one single setup, which is very powerful because you could have this one closed, and then you'll be able to get the pop-ups based on your alert preferences. So here I can say, okay, notification, I want to receive an in-app pop-up or an email anytime this alert triggers. And this alert will be based on the tickers that you have here. So again, very, very powerful.
That's great. I mean, is that just going to be TradingView though, or did you say, or is it going to be the other?
So so right now on Ninja, you can already set up alerts. So NinjaTrader already has that feature. TradingView, we also have, I don't know if you guys use TrendSpider at all. We do have that capability in TrendSpider as well, and potentially we will add it as well on Sierra Chart at some point, yes.
Cool. Okay, any other questions? Put them in go to meeting or in the, then I get John, it's just a shame TradingView doesn't update the levels automatically. Thought they do.
Which one, sorry?
Johnson put in just a shame TV doesn't update levels automatically.
TradingView?
TradingView, I'm assuming that's TradingView.
Yeah, so to answer that question, so the way TradingView works is it doesn't have any API. So it doesn't. So it's a kind of a limitation of the platform. So what we've done is there's two ways. Either you use the old custom level, which is really you manually put the level yourself, or you would use our end of day and our intraday. The only thing that you need to do really on your side is either refresh the indicator, so you will see a blue box here when the new update is released, and you do that, or you just remove the indicator and add it back. And that unfortunately is the only thing we can do due to the limitation of the platform. It is not on, unfortunately, it's not on our side. We do upload on the back end, but it's more like TradingView does not have an API, so it's very hard to integrate without that.
Right. Okay. One more question here. I know I've asked this before, but I still don't know the answer. If prices pass the one-day minimum or max and come back from the other direction, is it still valid the same way or broken, more like a reaction, like you talk about? Can't think of the word that you use when it blows through a inflection point. Inflection point, right?
Yeah. So I think if we go to our academy and we go to our quant strategies. So what is important to see is, where is it? Sorry. Just come here and look at our gamma levels and our back testing results. So basically, like this is 4 years of history. It's still, we still have to update that. We didn't get to that yet, but essentially it's very, very important data because we have about almost 1,000 days of data, and we have this is SPX, of course. The success of the one-day min means if the price the next day close above the one-day min, and the success of the one-day max is if the price the next day close below the one-day max. So we see that on 4 years of history, and you also can access the full data file here. So you can access the Excel with all the calculation and all the data here. On basically 87% of the days, the price the following day, so you get the one-day min today for tomorrow, next day the price close above the one-day min on 87% of the days, close below the one-day max on 85% of the days. So I think you need to look at these statistics and use that data to potentially understand if the price could then move back to the lower range. So again, it's basically.
I think what he means too, if it say it blows through the one-day minimum, like yesterday, NASDAQ bounced off of it. That's where I got ticked and on a short and got screwed on it. So if it blows to the one-day minimum, comes back, would you play it as more like to the downside? So if it blows through, obviously because it's the one-day minimum, and it comes back, do you have that as now a resistance area?
But I also would consider this number, and for example, like let's say that the one-day minimum is here, right? And let's say the price, as you said, moves below here and then comes back here.
Right.
This for me be a resistance, but at the same time, I need to be aware that there are chances that the price could potentially move here. So if I'm basically thinking, okay, I'm gonna short here, then you always want to have a tight stop because you look at the statistics.
Right, 87% of the time.
The days the price tends to retrace. So it could really be that we are in a very downside market and the price moves like here, but it could also mean that the price basically comes back to the kind of like area on top. So it kind of like, if you want to look for this movement, it's totally fair because we are in a strong downside trend, and what we see is that when we break the one-day min with strong price action, then typically the price tends to move very. So it's normally those 13% of days where there's a lot of volatility and the price moves. So the price tends to retest and then potentially closes lower. But if it doesn't, then make sure that this could happen because of the statistics, right?
Right, because you only have a 13% chance by your back testing that it's going to make that move lower potentially.
And this move lower could be a strong move, so it means that it's totally valid what the user is asking. But just paying what you want to do is set up yourself for success by using kind of like a data-driven approach. So obviously, just make sure you account this into consideration.
Right. Okay. Any other questions, guys? That was a pretty good webinar, pretty good info. Oh, the biggest question, the most pressing question is, what does MenthorQ stand for? What does it mean? I've always wondered that. Like, what is that?
So let's say that mentor is more like we wanted to provide our knowledge to retail traders. So we want to basically gap the bridge between like the large institutions and the retail. So mentor, in a way, it's like we're trying to become a mentor in that sense, and Q stands for quant. So like we are in the quant finance space. So for us, data, the way like we are moving with AI is very, very important. So the Q is really for kind of quant finance or quant trading.
Got it. That was the most important question of the webinar.
Thank you for asking.
Sure. All right, that was great. I mean, that was pretty informative, just going over the basic stuff. As I get through the courses, I'm gonna have way more, a lot more questions. I really want to learn way more about options, just because it's such a big part. And we talk about all the time how options activities exploded. So, plus I would love to trade, bigger picture stuff too with options. So I wanna really dive into your stuff, but it's a really good educational platform too that I've seen, that I've gone through so far.
Yeah, and the other thing that you can also look for is the swing model. So even though you might not be trading swing on futures, the swing model is actually very, very effective. So it provides you with the levels for the next 5 and 20 days. So we have a 5 days model and a 20 days model, right? And the levels are on stocks, ETFs, and indices, but you do have basically an indicator here. So let's say that you wanted to trade yes, and you wanted to add the swing levels. You don't have them, you get an error message, but we can actually really simple convert our SPX level on yes. So now, like, again, let's add basically our end of day indicator. So this kind of also tells you another important picture, right? So let's go back here. Let me just add my primary levels, right? And then we have our swing levels, and let me offset that by 150. So we have our swing levels here. So again, another important picture, right? That puts support, and that 1-day min is also now basically at the support area of our swing levels for the last couple of days. So our swing levels, which is the ones that you see here, which is this lower band, is also now at this area here on SPX, converted to yes, basically. So that means that this area here can also now become a stronger reaction area, because you can also confirm it with our swing level. And then if we go back to the swing level, what does this tell me? That if we look at SPX, 5 days, on 76% of the last 117 days, the price closed above our lower band or below our upper band. So that means that if we move in this area, this could be a very interesting area, because we have our put support, we have our 1-day minimum, and we also have our swing levels.
Right, and the more confluence, the better, obviously, there. And then if you throw in my stuff for, not my stuff, but say you got buy icebergs down there, sell stop runs. That's just incredible confluence for incredible edge. I mean, you already showed their stats that it closes above there 75% of the time, and then you add in the other stuff, and those are really, really powerful areas.
Yeah, exactly. So you can also use that to potentially understand what could happen. And then you have your 5 days, you have your 20 days, you have the back testing here. So that could really help as well. And again, these are like 5 days in the future, but they could really be very important areas that you can look for as a reaction.
Awesome. Last question. Is there any end of day pin model that you guys have in ES SPX?
Yeah, we are working on our Vanna and Char model, and we are also working on our flow model. So I think hopefully we can release those by September. So yeah, that would be very, very, very nice, very interesting.
Cool. Awesome. That was a good webinar, Fabio. I appreciate it.
Having me as always. And if you have any question from the audience, feel free to send me a message, Scott, as always, and I can reply in the chat. And
Yeah, absolutely. And then I'll post this recording on the Twitter here, or X, whatever it's called now, and YouTube. So awesome.
awesome.
All right,
Thank you.
for your time. Talk to you later.